Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Coming to you live from SmartCon in New York City. Joining us for this segment, we have Nadine Chakar. She's Managing Director, Global Head of DTCC Digital Assets, and we're here to discuss how blockchain's role financial infrastructure has really evolved over the past year. Nadine, it's great to see you as always. Welcome back to
Thank
the
you
show.
for having me.
Could you start by telling us more about the role of the DTCC? It's just so fascinating to hear all the transactions that go through, the DTCC daily and how the organization is approaching innovation and thinking about blockchain.
Let me go back to history, right? DTCC is about 50, 55 years old. And it was actually set up by Wall Street to deal with what at the time was known as the paperwork crisis, right? And what happened there is stock trading became so popular that people, we had bikers going up and down Wall Street, they couldn't handle the volume anymore. And the industry gathered and created DTCC to help with post-trade infrastructure. So today, we are the premier post-trade infrastructure in the U.S. markets. And because of that role, we are user-owned and governed. And it is that innovation that in the early 1970s got us to where we are today. So as we move forward, you look at the past 10 years where people have looked at blockchain as a solution to a problem yet to be defined. And you've seen a lot of infrastructure mushrooming in the US. So we all created different digital infrastructures, and then we sat back and complained that there's no traction, there's no adoption, and so on. The role of DTCC is one where we're bringing the industry together. We are building with the industry for the industry and really listening to their pain points and deploying a technology that really solves a lot of the pain points around liquidity, around operational efficiency, around risk. Collateral mobility is a good example of that, scalability. So blockchain's got an amazing and a lot of attributes, but there's still stuff that doesn't work well for the scalability that we need. You think of us, we settle $4 quadrillion a year. It's a lot of zeros. Actually, it's 15. I have to look it up every so often. So we need something that is scalable, that's secure. Privacy is important.
Right.
And no one company can solve all that. No one fintech can solve that. So this is why we're here at Chainlink. Like partnership with Chainlink is important, the partnership with the industry. And other fintech, it's bringing the whole industry together to solve these problems. And DTCC is really, trying to shepherd that forward in partnership with the directors.
So how is the DTCC thinking about tokenization today, which of course is one of the key topics here at SmartCon? What's your perspective on blockchain's role within that in the financial institution space? I'm curious to see, your thoughts on, yes, we know there are efficiencies there. Now, how do we extract that value?
Exactly. And I just said on stage, 26 for me is the year of migrating from speaking points to proof points.
Right.
At DTCC, we have the privilege of custody over $100 trillion in assets. So very staggering amounts of assets that have been entrusted to us to safekeep and operate. So our aspiration, I want to be careful, our aspiration is to tokenize that entire inventory. And what we want to do is, so when you tokenize all that, the question is, so what? Great. You tokenize them, you park them in a wallet, what happens next? So what we're trying to do is making sure that we can enable our clients' use cases, right? The best use case we have right now, and you hit on it, it's operational efficiency, it is collateral mobility, it's distribution. So that's what I love about blockchain. It helps on both sides of the ledger. It allows you to increase revenues with more distribution capabilities. It enhances the client experience. Atomic settlement, 24/7 trading, right? You can do anything that you want to do with your assets when you want to do them. On the second side of the asset, on the other end, it's cost efficient, it's risk efficient, it's capital efficient. And tokenization and blockchain go hand in glove in trying to enable that. But at the end of the day, they're only as good as the client's business case, operational models. Doing this and continuing business as usual doesn't work.
Yeah.
And that's why you see a lot of frustration in the industry. We've tokenized that money market. What do I do with it?
Right.
Well, can you use it as collateral? Can you use it to give your clients better access to the investments, monetizing that investment? So on. And like in today's world, In a regular money market fund, if you're not in there overnight, you don't get paid anything for parking your assets. In a tokenized money market funds, if you're there for 3 minutes or 3 hours, you're going to get paid what's due to you. So your money works harder for you. So there's a lot of efficiencies, a lot of good stuff. But because we've been so fragmented, but we're still in build mode, like the whole industry. Yeah, people will tell you we're doing this, we're doing that, we're doing the other thing, which is all fine and good. But there's still not enough scale. There's still not a lot of resiliency. And that's all, these are all problems we're working together with the industry.
Just run the risk of operating in silos again after putting, this massive effort into, the next phase in the global capital market. So DTCC, Chainlink, you recently collaborated with 23 additional firms on corporate actions initiative. Tell us about that.
That is a great example. Corporate actions are the bane of our existence in the financial markets, right? But they are very important, right? Like that's investor protection. That's where we pay, you get paid as an owner, you get paid your dividends or interest, or you get a chance to express proxy voting and all that stuff. So moving these activities on chain is critically important. For years, we've spent as an industry an incredible amount of money to figure out, and we've done great work, right? We've automated costs, but as a former operations manager, and anybody listening to this has got responsibility for corporate action, all it takes is one mistake.
Yep.
It's costly. It brings regulatory scrutiny. Most of it, the worst phase is you're losing money for your clients. It's not good. So we've always dreamt of a golden copy. Because you think about it, the company declares a dividend. And then that data is disseminated to 5 parties. 5 parties reconcile that information. And then you put time in the market. So as a fund manager, ideally, if the deadline is at 5 o'clock, you want to be able to go to 4:58 and make that decision. Today, we cut off hours and days before just because of the operational manual work that needs to go on there. So Chainlink showed a blueprint or a leadership here by bringing the industry together. Our involvement, to be very honest, was more on the technology side. Our tokenization framework is unique in the sense where we allow the user to embed customized data schemas in the token. Listen, everybody and their brothers shoot a tokenization engine. They're downloads, and you can download them for free from various websites. But what we've done is given really good thought into the data aspects of that.
Right.
Blockchain isn't really a good data manager. So working with Chainlink, we've been able to help put the data schemas in there to be able to have enforceability, to be able to have more transparency. Have we resolved it? Have we crafted that? No. There's still loads of work to be done, but it's probably the furthest we've gotten as an industry to try to agree on a common framework for self-corporate actions. When I look ahead, I see lights, and I know there's some side of train coming at us, but there is definitely not a so. The partnership with Chainlink, and I have publicly thanked Sergey earlier because he really put in the time and the effort to bring the industry together, and that's what we needed, that catalyst. And we will all learn.
Is to finding success within these projects. So when you think about the digital industry moving forward, what do you see as the most important milestone? Or how are you going to benchmark when, okay, this equates to success to me?
So I'll start with a word that is really a cool word, but also, drives me nuts at the same time. It's interoperability.
Yes.
So we throw that word around very loosely, but the fact of the matter, it's more than technology. And what you've seen so far is, and great credit to the fintech industry, they've really moved us along quite a bit, but they've always come from things from a technology perspective. And as we move forward to solve all these things, there is, I'm going to call them non-functional requirements that need to come out. Like we need better standards, we need better data governance. We don't need to start from scratch. We already have a good foundation. Some of it works perfectly, and it needs to be translated into DeFi speak. some of that needs to be flushed out and moved on. And we need to do that as an industry, which we are doing. And in partnership with FinTech and Big Tech, we'll get there. What we, as I'll probably close where I started, is we need clients to start to move, or adopters to start to move away from the sidelines. Like, we've proven the technology works. We have proven there's goodness in that technology. But unless people start to think through and reimagining how they do business, how it impacts them, I could turn blue in the face and tell you how great this is all is, but until you experience it for yourself, we're not going to make progress. But hopefully, as the industry starts solving them together, this is one thing I love. I mean, I love a lot of things about our industry, but there's an intense competitive
I
side
was gonna
of
say,
it.
it's very competitive, so once
But-
it starts getting adopted,
But
but
we are also increasingly collaborative, right? We come together as a group to solve the big problems. And I'm preaching and begging the whole industry, stop competing on infrastructure, because the hallmark of the US market is we have one post-trade infrastructure, it's DTCC. Look how quickly we adopted TT+1, right? Look how quickly we've done treasury clearing. We will get the industry to facilitate adoption of digital assets. We can't do this alone. It takes a village. And that's what I love about what we do, is the village is coming together. And then listen, they'll compete afterwards on the strength of their products, strength of their imagination and ideas. Competing on infrastructure is a race to the bottom.
that's why your vantage point is always so unique. Appreciate your insight as always.
Thank you
Thanks
so
for
much,
joining us on
Beth.
Trade Talks.
Thank you.
You got it. Thanks for joining us from SmartCon. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.